The overlooked impact of senior citizens on financial stability in Sri Lanka, a crucial election consideration. Introduction. Sri Lanka is navigating a precarious path out of bankruptcy, guided by stringent IMF stipulations. While the focus has largely been on the demands of younger populations and trade unions, an essential aspect remains overlooked: the financial stability risk posed by the mass withdrawal of deposits by senior citizens. This issue is particularly pressing with the upcoming presidential election, where the stakes are higher than ever. Senior citizens, a silent majority with significant financial influence. Senior citizens in Sri Lanka hold a substantial portion of the country's bank deposits. Traditionally conservative savers, they prefer the safety of bank deposits, which constitute a significant part of the banking sector's liquidity. Despite their financial influence, their concerns and potential actions are often ignored in economic policy discussions. The potential consequences of ignoring senior citizens. Banking sector stability. A mass withdrawal of deposits by senior citizens could trigger a severe liquidity crisis. Banks rely on deposits to maintain lending operations and meet withdrawal demands. A sudden depletion of these funds would strain their liquidity, potentially leading to bank runs and closures. Historical precedents and economic models illustrate that financial systems are highly sensitive to depositor confidence. Even rumors of instability can cause significant withdrawals, further exacerbating the situation. Economic chaos and instability. The economic consequences of a banking crisis would be profound, undermining confidence in the entire financial system and making it difficult for the government to implement necessary reforms and attract foreign investment. The IMF's reform plan, already unpopular among the younger demographic, would face additional hurdles, potentially derailing the recovery process. Impact on public services and government debt. The government's ability to fund public services would be severely compromised. With a weakened banking sector, borrowing costs would rise, increasing the national debt burden. Public services, already strained, would face further cuts, disproportionately affecting the most vulnerable, including the seniors whose withdrawals precipitated the crisis. The crucial role of the upcoming presidential election. Election uncertainty. With the presidential election looming, the political climate is highly charged. Unlike the current president, most contenders advocate reversing or deviating from the necessary reforms. These reforms, though painful, are essential for long-term stability but have adversely affected government servants, leading to strong trade union actions. Opposition parties, either unaware of the gravity of the situation or indifferent, continue to campaign on populist promises that threaten the fragile stability achieved so far. This happy-go-lucky attitude in political campaigns exacerbates uncertainty and undermines confidence in the economic recovery process. Preemptive action by seniors. The fear of potential policy reversals and economic instability may drive senior citizens to withdraw their deposits preemptively, even before the election. Such actions could trigger a financial collapse, undermining the fragile stability and plunging the country back into crisis. The mass withdrawal of deposits would not only destabilize the banking sector but also hinder any government's ability to respond to economic challenges, irrespective of the election outcome. The rise of the far-left party and external influences. Popularity among youth and diaspora. A far-left party, JVP/NPP, has gained significant popularity among the youth and the Sinhala diaspora, capitalizing on the widespread discontent with corruption and economic mismanagement. This party advocates for the recovery of alleged looted wealth as a solution to financial woes, postponing necessary public sector reforms. Historical parallels and geopolitical concerns. The situation mirrors the rise of populist movements in other countries, such as Greece's election of Yanis Varoufakis, though Sri Lanka lacks the safety net of EU membership. Geopolitical tensions, particularly with China, India, and the US, add another layer of complexity. China's interest in the Hambantota port and potential financial support to the leftist party through diaspora channels could destabilize the region further. Trade union influence. The JVP/NPP's influence extends through strong trade union networks, which are already agitating government servants. This could exacerbate public unrest and lead to a scenario where Sri Lanka faces internal instability similar to conflict zones like Gaza. The role of government and policymakers. The government and policymakers must recognize the potential risk posed by ignoring the financial concerns of senior citizens, especially in the context of the upcoming election. Proactive measures are necessary to prevent a financial crisis and ensure a balanced approach to economic recovery. Engagement and communication. The government should actively engage with senior citizens to understand their concerns and reassure them about the safety of their deposits. Transparent communication about the state of the banking sector and the measures in place to protect depositor funds is crucial. Financial security measures. Implementing policies that provide additional security for senior citizens' deposits can help maintain confidence. This could include higher insurance limits on deposits or government-backed guarantees. Inclusive economic policies. Economic policies should balance the needs of all demographic groups. While addressing the demands of younger populations and trade unions, the government must also ensure that the concerns of senior citizens are not sidelined. Encouraging financial literacy and providing support to senior citizens can help them make informed decisions, reducing the likelihood of panic-induced withdrawals. Conclusion. Ignoring the financial influence of senior citizens in Sri Lanka poses a significant risk to the country's financial stability, especially with the upcoming presidential election. The government must take proactive steps to address their concerns and ensure a balanced approach to economic recovery. By doing so, Sri Lanka can avoid the potential pitfalls of financial instability and create a more inclusive and resilient economy.